Dividend stocks pay regular income, attracting investors seeking stability and cash flow benefits. Growth stocks reinvest earnings, aiming for higher future value instead of immediate payouts. Many investors misunderstand dividend stocks, thinking they lack growth potential or excitement. Surprisingly, some dividend stocks can outperform growth stocks during volatile market periods. Growth stocks often come with higher volatility and risk, but promise bigger long-term gains. Dividend reinvestment strategies can magnify returns over decades, making income investing powerful. Growth stocks appeal to younger investors who prioritize capital appreciation and future wealth. Meanwhile, dividend stocks attract retirees needing steady cash flow for daily spending. True investing savvy involves balancing both dividend and growth stocks for diversification. Ignoring dividends can mean missing out on compounding income streams that build wealth quietly. Growth stocks require patience as their value depends on eventual business success and innovation. Dividend stocks tend to be established companies. Growth stocks are younger industry disruptors. The truth is, timing and personal goals dictate whether dividends or growth suit you. Balance your portfolio wisely to thrive long term. Don't overlook benefits of dividend-paying stocks.